Hello, Premium Hunters. It is Andrew again, and I am back for another weekly portfolio performance update video for week 19, which is May 5th through May 9th. And if this is your first time to my channel, again, my name is Andrew and I'm an options trader, and this is where I pull back the curtain to show you exactly what I do and how I do it. I post these videos, these update videos each week, typically on Mondays, to analyze my previous week of options trading. And I also post other videos on my channel with just general knowledge type of information, sometimes just general information about options trading in general, and sometimes step-by-step guides very specific on how to execute some of the strategies that I employ. Just a quick disclaimer, I am not a licensed financial advisor, and the information provided on this channel is for educational purposes only and should not be considered financial advice. So let's go ahead and get into why I do this. The main reason is because I want people to know that options trading is legit. It is a legitimate way to generate consistent income. It's not necessarily an easy way of generating income. There is a pretty steep learning curve to trading options, but with enough time and dedication and education, pretty much anybody can do this. If you've got the will, then there is a way. So that's part of the reason why I do these videos each week. And the second goal is to build a community around options trading. I'm looking to just create a community of like-minded people who are interested. Options is a numbers game, so people that like working with numbers generally like options trading, or options trading are people who like working with numbers, not necessarily the other way around. But you do have to have some tolerance for risk and maybe enjoy the excitement of options trading. But yeah, I'm just looking to build a community around the options trading niche. And so if you have any questions or comments or anything that you'd like to contribute, please put that in the comments section below. Before I get started, I do want to mention that I do have a video called Demystifying Options Trading, or Demystifying Options. I've got a link to that in the description below. So if you are new to options trading and you want to learn some of the basic concepts when it comes to options, definitely check that out. And you'll want to look at that prior to watching this video, because it will help you understand some of the nomenclature and some of the terms that I get into during these videos. All right, so with that out of the way, just what to expect. What I'm going to do in this video is go through all of my closed trades. I'll talk about the strategy that I use, the goal for that strategy, the profit and loss for those trades, and just do an overall performance analysis for the overall week. And then I will compare my current week's performance to previous weeks to see how I'm tracking throughout the year. And then I'll give you any insights that I gain from that analysis, so that you can understand how my mind is working with regards to my plan for options trading and how I think I'm doing overall. All right, so I just switched over to my trade tracking platform, which is TraderSync. It is a great way to track your trades, and if you're just getting started in options trading, I always recommend have a way to track your trades so you can go back and analyze your performance. It's one of the big mistakes that I made when I first got into options trading, and I feel like I could have made a lot of progress a lot faster had I taken the time to track my trades. The problem with tracking your trades is that it does take time. That's one problem. And the other problem is finding a good platform to do it. I mean, anybody can make a spreadsheet, and that's one way to do it. But the problem with spreadsheets is it is a bit more time consuming, because you're having to manually enter data into these spreadsheets, where one of the great things about TraderSync is, as its name implies, you're able to sync your trades with your platform automatically. Basically, here you just come down to this Add Trades, this little plus button here, and it'll take you to a screen where if it's not already set up with your brokerage platform, you can go ahead and put in the the credentials for your broker platform, hit the sync button, and boom, within a couple of seconds, all of your trades will import into your platform. If it's your first time, it'll be all the entire history, or you can specify how far back you want to go. But if it's subsequent syncs, then it's going to just sync since the last time it's did a sync with your platform. So right now what I've got loaded up here in TraderSync. Oh, and by the way, if you do want to give TraderSync a try, use my referral link in the comments section below. They do have a free trial period, so you can try it out, play with it on your own. You'll be able to see I use TraderSync to go through my trades, so you'll see how I have it set up. You can customize it in many different ways. You can customize it the way I have it set up. Of course, it really just depends on what kind of trades you do and your trading style as to how you'll want to. It's a very versatile platform, so the way you'll want to do it for yourself really just depends on how you trade. But you'll get to see how I do it in this video. The first thing that I'll go through is the performance year to date through last week, and that's what I have right here. So my total profit so far through week 18 is $60,881. That's after fees and commissions. My gross return is just over $63,400. And then up here you can see the chart for how my profits have grown over the year. Started out really good, had a little bit of a loss here, had a little bit of a loss here, but you can see it's been a pretty steady incline. And then of course Trump had to announce his tariffs, his, what did he call it, Liberation Day, and that caused the market to tank. And that caused me to have to take some losses as well, and I took some pretty significant losses here. Let's go ahead and take a look at the week-by-week bar chart. Where do we have that? That is week closed, so I'll select that. And here we have a bar chart week by week for my profits and losses so far this year. And this is week 1 through week 18. So you can see here that my biggest win so far was a just over $13,000 profit. And my biggest loss was just over almost a $19,000 loss. And the week previous to that was the second biggest loss, which was almost $4,900. Last week I did have a relatively small loss. I mean, it was a loss for sure. I don't like losses, nobody does, but it was just over $1,200. So that's the performance so far this year. So now what we'll do is we'll take a look at the trades that I did in week 19, and we'll see whether or not I took a profit or I had to take a loss. So let's go ahead and take a look at that. All right, so the first strategy that I want to cover for week 19, so you can see I have week 19 pulled up. The week closed, I have a tag set for that so that I can select just the trades for that week in which these trades close. So all of these trades here closed on week 19, and then the other tag I have selected is the setup for weekly wheel. That's right here. So these are all weekly wheel trades that I closed in week 19. And you can see the total was just over $700 with a total of 5 trades. All of them profitable except for one loss that I took here, a very, very small loss that I think was pretty much just an accidental entry and exit. But let's go ahead and take a look at the chart at one of these trades. And before we do that, just want to let you know that if you are interested in how I trade the weekly wheel option strategy, I do have a video that takes you step by step through that strategy. That's called How to Print Money Using the Weekly Wheel, and I have that linked in the description below. So let's go ahead and take a look at the chart on this one. All right, so here we are on the chart for the weekly wheel trade, and this is for Google. So Google, I had been selling puts on Google and collecting premium, and then at some point I was assigned the stock because the puts went in the money at expiration. Those puts were sold at a strike price of $187.50, which caused me to have to buy the stock at $187.50. And if we add up all of the premium that I collected through the puts and the calls that I have sold against Google since starting the weekly wheel, my cost basis would come out to $168.02. So on May 7th here, you can see that I sold a call at $170, which is above my cost basis of the stock that I own. And that's important because if the stock goes above the strike price of my call, I will have to sell the stock at the strike price, which means I need to make sure the strike price is above my cost basis to ensure that I am not selling the stock at a loss. So I sold the 170 call at, let's see, right here will tell me, yeah, I sold that at $1.06, and that was on May 7th. And as you can see, the stock took a pretty sharp decline on that day, right around noon or just before noon. And it worked out good for my call because I was able to take a quick profit of 50% profit. I was able to buy back those calls at 53 cents. And so that was a quick in and out. It's good the fact that I was able to take the profit on this call that I sold. What's not good is that the stock is dropping further below the cost basis of the stock that I own. The further below the stock moves from the cost basis, the more difficult it becomes for me to be able to collect premium on the calls that I sell, especially if I'm keeping these calls above the cost basis of my stock. But what I think I'm going to start doing in the future here is I'm going to start selling calls below my cost basis. And yes, that is a risk. However, there is a tactic that I can use to help mitigate that risk. And that tactic is to roll those calls further out in time so that if the stock does go above my cost basis or does go above the strike price of my calls, which would be below my cost basis, I can roll it out in time. And by rolling it out in time, there's a couple of things that I can do. Number one is I can collect more premium by doing that, which will then, again, lower my cost basis. The other thing is to just give me more time, because if you go back and you look at these stock charts, you can see that, the stock price just fluctuates up and down and up and down. And so just because the stock has moved up above my strike price doesn't mean that it won't move back down below my strike price, especially if I can roll and collect more premium, moving that cost basis down. So eventually it's going to do that. Most likely. I can't say that when a stock price goes up that it always comes back down, but typically it does. It's just the cyclical nature of stocks. And here's the thing, it's a calculated risk. So I mean, if I run into that position where I have to take a loss, then so be it, I have to take a loss. But right now, I don't see that happening for Google. I think Google is kind of stagnant right now. And so I think I can sell calls below my cost basis, collect a little bit more premium by doing that, and that will help drive down my cost basis so that I can then get out of this position, free up some buying power, and do more strategies that will generate more income for me. So going back to this trade, you see that it generated $310 of income for me on that trade. And let's go back to the dashboard. So again, total of 5 trades, 4 profitable trades, 1 was a mistake, and that was a total profit of just over $700, $701. All right, so the next strategy I'm a little excited about just because it's a newer strategy. And let me go ahead and get into that one. All I have to do here is come to my custom tags. Nope, I got to go to my symbol. Nope, I got to go to my setup. And let's see, this is going to be the 0 DTE. So let's get those loaded up for the week. We'll deselect the weekly wheel. And here we see all of the 0 DTE, or that stands for 0 days to expiration trades that I did last week. And there's quite a few. There's 18 of them. And I had a total profit of $150.06. So let me go ahead and switch back over to my slides here. Actually, before I switch over to my slides, I do want to show you one other thing here. Let me go to my custom tags. I want to show you how I did. So this is, I think, the third full week I've been doing the 0 DTE trades, and I've been kind of playing with it a little bit, tweaking them a little bit. But I wanted to show you how I did in week 18 on the 0 DTE. You can go back and watch the video. But the 0 DTE, I did 39 trades for a total. I don't know if that is accurate, because I was still working on setting up TraderSync with the proper tags to track these accurately. And I didn't spend a whole lot of time on it. I know that these are all tagged as 0 DTE, but I don't know that I combined or split the trades properly to show individual iron condors, because that's what I've been trading, is iron condors. But I do know that this number is correct here, where I lost $1,690.45 on these trades, these 0 DTE trades that I did last week. So even though I don't have a big profit for this week, week 19, it is a profit, whereas last week I had a loss. So I am happy to see that. But here's the thing about 0 DTE, is that it is a trading strategy where if you do it properly, and you have to be very detailed about how you do the trade, like exact entry times, exact exit times, or the stop losses that you put on your trades, the slippage. There's a lot of little details that go into the trade that if you don't get them quite right, you could easily swing from being a profitable strategy to being one that's not profitable. Because the edge that we have with this 0 DTE trading is not a huge edge. It's a fairly small edge. And so you have to be pretty precise with how you execute this strategy in order to be successful. And not only that, even if you are doing everything right, you can still go through pretty lengthy drawdown periods. You may go through a month or two, or even 3, maybe even more, of periods where you're losing money. And so this is a strategy where trader psychology is really, really important, because what we're doing here is we're using backtesting platforms to put on different variations of this trade and then seeing what works. And so what we're seeing here are the results of using those parameters that have shown success in the past. But then again, even then, that doesn't necessarily mean that it will be successful in the future. But with that said, let me go ahead and switch over to my slides so that I get into some background on how I'm trading this strategy. All right, so if you watched last week's video, I did get into the type of 0 DTE trading that I'm doing here. And it's a strategy referred to as MEIC, which stands for Multiple Entry Iron Condor. I get into explaining what an iron condor is in last week's video. So if you're not sure about what an iron condor is or how it's set up, go back and watch last week's video. But essentially what we're doing here, the reason it's called multiple entry is because we are entering multiple iron condors throughout the day. And these are the times that last week I was entering these trades. So I'd start at 12:30, put another one on at 1, put another one on at 1:30, 2 o'clock, 2:30, 2:45. So essentially what I'm doing here is I'm putting on each spread separately. So I'll put on either the calls or the puts first, depending on which way the market is moving. and then I'll go ahead and try to match the credit on the other side. And then once I have both sides of the iron condor open, I will put in a stop loss for each side, and the stop loss would be equal to the amount of credit received minus 10 cents. So that if one side gets stopped out, it then becomes a break-even trade. And the only time you'll lose money on that particular tranche is if both sides get stopped out. And then you would end up losing pretty much the amount that you collected on the trade. So the idea here is you're opening each side of the iron condor outside the expected move of the SPX. This is traded on the SPX, by the way. So you're opening each side outside the expected move, hoping that the price of the SPX stays within that range. And if it does, both sides are going to remain open until the end of the day, at which point they'll expire worthless and the credit that you received you'll keep. However, that typically doesn't happen. Typically, at least on one of these 6 trades, you're going to have one side closed or the other, and sometimes both sides. So the max loss would be if you get both sides stopped out on all 6 trades. The max win is if you get no side stopped out on all 6 trades. And so that's how we trade throughout the day and trade throughout the week, hoping that we can keep more premium than we give up. Now on Friday, I did a little bit of a twist on this multiple entry iron condor. And so here's what I did on Friday, and it did work out profitable. I did make a profit on Friday, so it did work out. And it does make sense to me. So essentially what this is, it's called an RTS, and RTS stands for risk tolerance sequence. I saw this from online from another trader's name is Nick Mango, and he went through his variation of the multiple entry iron condor. And so essentially, instead of doing it at predetermined times throughout the day, what we do is we put on the first position between 10:30 and 11, and then we don't put on any new positions. No new positions until the first position, the value of the first position, has decreased by at least 50%. And then we'll do the rules for putting on the stops is essentially the same. It's 2 times the amount of credit received less 10 cents. So if on the call side, on the call spread, I received $1.75, my stop would be placed at $3.40. 2 times $1.75 is $3.50, minus 10 cents makes it $3.40. And then I re-enter after getting stopped out. If one side or the other does get stopped out, then I will wait for the existing side, the side that's still remaining. I will wait till the value of that has decreased by at least 50%. And typically, if one side does get stopped out, the other side is probably going to be pretty close to 50%. But probably one thing I'll look at is just to make sure that the price action is not too hectic or too wild, because that's when you get stopped out. Once the price starts moving very fast, that's when volatility expands, and that's when your price is going to expand, and that's where you're going to get stopped out. So now, the reason why I'm kind of excited about this twist on the MEIC is because it makes sense to me. Number one is that it's forcing you to wait until your existing position is in a fairly safe position, because if the value is decreased by 50%, then the chances of that getting stopped out has been reduced greatly. So before you put on or deploy more risk, you're making sure that your existing risk is in a much safer position. Number two, with the other strategy where you're just putting on iron condors at predetermined positions or predetermined times, there are times that I found where I'm putting on a position pretty much at the same strike price as the previous position. It's like they're right on top of each other. And when you think about it, when you have 2 positions open at the same strike price, then you're doubling your amount of risk at that level. So if you do get stopped out at that price level, not only are you getting one stopped out, but you're getting two stopped out, and maybe even more than that. I've seen where there's been three at the exact same price level. And to me, that just doesn't make a whole lot of sense to put on more risk at the same level. Let's wait until we move away from that level before we put on more risk, so that that additional risk can be at a different level. That way, if that does get stopped out at that level, you're only getting one position stopped out rather than two or three, maybe even more. And then the third and last benefit that I see to this twist on the MEIC is the fact that if you're having to wait until the value of your previous position has gone down by 50%, that requirement is also ensuring that the price action of the underlying, the SPX in this case, is relatively stable, because if the price action is pretty wild, IV expands, and that's going to cause the price of your position to expand. So, and actually on Friday when I was doing this, my second trade that I was going to put on, I had noticed that the value of my previous position was at 50%. So I was ready. I was setting up to go ahead and put on my next position. But by the time I clicked send, my position had expanded, and I looked at the chart and the price was starting to move pretty quickly. So I stopped and I paused. I said, okay, well, I'm going to have to wait until the price action settles back down so that the value of my previous position goes back down under 50% again. So it's kind of a built-in mechanism to make sure that the market's not moving or swinging too fast before you put on new positions. All right, so with that said, let's go ahead and take a look at my 0 DTE trades for last week. All right, so we can take a look at these 0 DTE trades a couple of different ways, the way I have it set up in Trader Sync. One is we can just take a look at this widget right here, and we can see the total 0 DTE trades was a total profit of $150.07. We can see that the iron condors generated a profit of $150.07. These are all iron condors, so that's why that number is the same. But for those RTS trades, I have an additional tag called RTS, and that's the tweak that I just described. And you can see here that I had a profit of $582.06, and those were the ones that I traded on Friday. And I have some additional tags here. I've got a category, a custom category called 0 DTE and number. So, so I have the day of the week, and then I have the number for the tranche. So basically the number identifies the number of the iron condor that I put on for that day. So Friday 1 would be the first iron condor that I put on for the 0 DTE on Friday. And that was an RTS trade. And you can see here that I made $275 on that one. The second one, I made $325. And the third one, I got stopped out on one of the sides. And so that ended up being pretty much break even. I made $5 on that. The gross profit was $5, but after commissions and fees, it was a loss of $3.69. So the RTS did generate a profit on Friday. And then the other way I can look at those trades is, once I have the 0 DTE strategy selected, I can then look at my calendar widget here, and I can see that on Monday, I lost $437. On Tuesday, I generated a profit of $450. On Wednesday, I did not trade 0 DTE, and the reason is because the Fed made their announcement on Wednesday, and we don't want to trade 0 DTE when the Fed is speaking, because when the Fed makes an announcement, it can really cause some wild swings in the market, so it's better not to trade at all, which I didn't. So no profit or loss on Wednesday. On Thursday, I lost $445, yep. And then on Friday, we made a profit of $582. So you add all that up, and that works out to be a profit of $150.06 in the 0 DTE. So we're going to keep on working with 0 DTE. I am optimistic about it. I'm a little bit nervous about having to go through some drawdowns, but it is an exciting strategy to employ. So we're going to keep doing it. So stay tuned next week to see how we do on those 0 DTEs. All right, so now let's go ahead and take a look at how we did for the week. Let's go ahead and deselect my 0 DTE strategy so that we can see all of our strategies for the week 19, to see what our total profit is. We can see it's $851.45. We did 23 trades. If we take a look at our little widget here, we can see that $150 came from the 0 DTE, and then $701 came from the weekly wheel. All right, so let's go ahead and see how we're doing so far year to date. Let's go ahead and add this to our total for the year. And we can look at that just by coming under week closed and selecting all of the weeks closed for 2025. Let me get that selected, deselect merge, we don't need that. So this is through week 19 for 2025. It's a total profit of $61,732.95. And so if we take a look at our average weekly profit for week 19, we are now sitting at $3,249 each week. So still in the green, we're still profitable, almost $62,000 for the year. Let's go ahead and take a look at our graph or our chart to show. We can see here that since, when was this? This was April 9th. Since April 9th, for the last month or so, we've had a little bit of an uptick in the profit, but it's been pretty flat. And that's because I do have some capital that is locked up, and that's limiting the amount of profits that I can generate. So we're just going to have to be patient with it. I do know that we'll get back to where we were in the beginning of the year. It may take a month or 2 or 3 months, but we will get back there. In trading, patience is a virtue, so definitely have to just maintain patience and keep with the game plan. Take a look at our week close chart here. So we do have another green bar for week 19. It's one of the smaller green bars. It is the smallest green bar, but it is a green bar, which is always better than a red bar. So thank you for stopping by again if you've been here before. If not, hope you stop by again next week and stay tuned because there's more content to come. If you have any questions or comments, please drop them in the comment section below. And if you enjoyed this content, please hit the like and subscribe to the channel. And I look forward to seeing you again next week on Better Options. Bye-bye, everybody.